So in this video, I showed that how to calculate partner's capital account, realization account, and the bills payable account and the creditors account. Because all the assets, these are assets are going to the realization account, and after the realization account, the all the liabilities, which are the liabilities, creditors, and the bills payable, these amount will be. This is the balance amount of the partner's capital amount, and creditors and bills payable. That amount will go in a different separate accounts. So next is the assets released amount is building of rupees. These are the amount released amount is sold it for the 80,000 rupees. 80,000 rupees is coming here. That is in a credit side. Credit side amount this will come in a credit side. This is the sundry assets. This much they have sold it for the amount 80,000 rupees. And the what are the loss happened? So total amount is 1,80,000 rupees. So total amount is in a debit side it is showing more 1,80,000 rupees, and here it is the which amount is sold it for the 80,000 rupees opening balance is this is asset released amount is 80,000 rupees. So 1 lakh rupees is the loss here. So that loss will be transferred to three partners distributed in the 2 is to 2 is to 1 ratio. So this is the realization account. Then after the realization account we'll see partners capital account. In a partner's capital account to realization account of the amount will be transferred to your partner's capital account. So that is amount 40,000, 40,000 and 20,000. Why balance brought down 26,000? Their opening balance is 26,000, 28,000 and 18,000 rupees. And by bank, who are the these are the partners. Magesh and Dinesh bought the 2,000 rupees from their private estate. So that is a 2,000 and 2,000 rupees. So rupees. And next is the deficiency amount. The in a debit side it is amount is showing, so we need to balance. So the deficiency amount is 12,000 rupees, 16,000 rupees and 2,000 rupees is the deficiency amount for the in a partner's capital account. After that, in a bank account, we how much the amount is there. So first to balance brought down, this is 8,000 bank account me, it's already there in a 8,000 rupees. And next is Dinesh and Magesh bought a amount of 2,000 and 2,000 rupees. Next is to realization account, and realization account is transferred this amount 80,000 rupees assets after selling the assets. That amount is coming here realization account 80,000 rupees. And by realization expenses, this is a already expenses from the partners, that is 2,000 rupees. This 2,000 rupees is coming here, and by creditors account 60,000 and 30,000 rupees. So 60,000 and 30,000 rupees creditors must by bank account. First we'll see what are the entries coming in a creditors account and bills payable account. Next entry is creditors account. In a creditors account by balance brought down, it is 80,000 rupees. Creditors amount is 80,000 rupees. And next is bank and for the bills payable amount is by balance brought down 40,000 rupees. Will be coming in a debit amount will be coming in a credit side. And next is deficiency account. Deficiency account, in a deficiency account to Dinesh capital account it is 12,000 rupees and a 16,000 rupees and 2,000 rupees. So this 30,000 rupees is not able to pay from the partner's capital account. That will be transferred in a deficiency account, partner's capital account to the deficiency account 30,000 12,000 30,000 rupees. Next 30,000 rupees. Next is bills payable and a creditors amount is 80,000 and 40,000 rupees. 80,000 plus 40 80,000 is to 40. 80,000 into 40,000, that will be taking in the ratio of 8 is to 4. So you need to make it a smaller number, that is 4 is to 2. So next the 4 is to 2. Next the deficiency amount. So deficiency amount is 30,000 rupees. This 30,000 rupees we cannot pay to bills payable account and the creditors account. So that's why this 30,000 into 4 is to 4 divided 4 into 4 4 divided by 6. The amount is 20,000 is not able to pay for the creditors, and I have showed in the working note, and again I'm saying. And the next is bills payable amount is it is 30,000 2 divided by 6. in a 4:2, 2 divided by 6, 10,000 rupees is not payable for the bills payable. So that's why this is a deficiency for the amount. The total liabilities and this amount will be coming in a bank account. So in a bank account, they are not from the bills payable 30,000, deficiency amount is 10,000. From the bank, it is 30,000 rupees, and for the creditor, 60,000 rupees, and a deficiency amount is 20,000 rupees. So balance in hand, it is 90,000 rupees. 90,000 rupees is in the balance in hand. It's in a bank account. So that will be paid to the bills payable 30,000 rupees, and for the creditor 60,000 rupees. And the deficiency amount, we cannot pay 10,000 rupees for the bills payable, and creditors 20,000 we cannot pay. So next is this is the so we are closing the creditors account and bills payable account. And this is a by creditors account, 20,000 deficiency amount is coming in a deficiency account. 20,000 into the need to balance. So next is bank account. So by realization account, it is a realization expenses was 2,000 rupees, and by per creditors account 60,000, and by bills payable 30,000 rupees. So 92,000 rupees is available in the bank balance, but and minus realization expenses amount is 2,000 rupees. So it is 90,000 rupees is a balance is in hand. So bank assets, these are bank assets. Bank assets is 80,000 rupees. Add assets released. Bank assets is this is 8,000 rupees, and need to add assets released, which has the sold it send it for the realization account. Add it is 80,000 rupees. And next add Dinesh amount. Dinesh amount is 2,000 rupees, and Magesh amount is 2,000 rupees, which is bought it from their home. So total amount they have 2,000 rupees, and total amount is 92,000 rupees is to all together with the partners. Next, realization expenses is there, that is 2,000 rupees already loan, that is minusing in the uh, balance assets amount, that is 90,000 rupees. Balance in hand now 90,000 rupees. This amount will be give it to the distributed to the partners. Liabilities, that is bills payable and for the creditors. So creditors amount is 80,000 and bills payable amount is 40,000. So total remaining liabilities is 1,20,000. Liabilities is 1,20,000 rupees, and though we have in a bank we have amount is 90,000 rupees. So 1,20,000 rupees minus balance in hand 90,000. So total deficiency is 30,000 rupees. 30,000 rupees we cannot pay for the partners. So total liability is 1,20,000 rupees, but the in the bank partners have a cash amount is 90,000 rupees. That's why this firm is going to insolvent. So total deficiency of rupees 30,000 rupees. This 30,000 rupees will be a pay for the creditors in the ratio of 4:2, because the partners are not able to pay their full amount. So in a ratio they are giving it to the liabilities. So that is a 20,000 will get it to creditors, and bills payable they'll get it at 10,000 rupees. That's why this firm is getting insolvent.